Okay, good evening, guys. Good evening. How do you guys do? So in this video, this is a zone video, and in this video, I'm going to be making a continuation of the zone episode one that I started with. If you did not see the episode one, you can go back to it. But I'm going to even make this one in such a way that even if you didn't watch the episode one, be able to still, you know, get, because I want this one to be very loaded and short. So yeah, let's. mm, So in this video now, we're going to be talking about the types of zones, the major type of zones that you'll be looking for. I'll be showing you how you can look for them on charts. And then I'll talk about the rules that govern zones. So we have four major types of zones to talk about. And then talk about the rules. Yeah. So let's start with the types of zones because I need to show you how you can pick the zone before I start telling you, okay, um, these are the rules. So I need to show you the zones first. So let's start. Let's start. So this is it. The first kind of zone I'm going to be dealing with is the one that you all know. That's the easiest one. I'm starting with the easiest one. The one that you all know, that's the whole B and the mitigation kind of zone, where you use the last candle at because that's where the others are. For example, this candle, even though it did not hold here, but this is a zone. But there are reasons why it did not hold. Maybe when we get to types of zones, you'll be able to understand. You get. So you want to wait till the end of this video. You want to wait till the end of this video. So um so there are different, you see this is another one. Even though it's not at the beginning of price, yeah. It's not at the beginning of price, but it's also a form of OB, because what makes OB is not that it's at the end of price, at the end, whether on the bearish side or the bullish side. No. What makes an OB is the understanding of the fact that OB means order block, not last block or highest block. It's order block. So if you understand what order means, you'll be able to pick OBs even amidst ranges. You get. So if, for example, if you have a red candle like this that is amidst green candles, that's where they store the orders, more orders for more buys. That's where they actually bought before the buy played out. You get. So that's order block. That's how I'm picking it. So that one is very straightforward. That's the one. These are majorly the ones that people know. Yeah, you can pick it on both the buy side or sell side of the market. For example, too, if you have where price sold at where price bought amidst selling candles. Yeah, for example, this zone where they bought a bit amidst all the selling candles. So you pick that zone out, the whole of that zone. That's a zone too. That's an order block. So that's what order block means. That's the first one. The second type of zone, I'm going to save the best for the last. Second type of zone is weak zones. Weak. People don't know that wicks are very powerful zones. In fact, I don't say more than OB, but you understand what I'm saying already. Wicks are very powerful. Wicks, they are very powerful zones because um okay, let's let me show you some on the chart. Look at this kind of zone here. This weak zone. You can see that kind of weak. Yeah. Yes. That's a weak zone. This one too is a weak zone. Get it now? That's a weak zone. You can see price is to buy, yeah. So price most times, the funniest thing is that most times price uses wicks as zones. Don't worry, I will teach you. I'll teach you. When we get to the rules, it will become more interesting. That we had to add like seasoning to this stuff that I'm showing you. But just follow me for now. So, you see, wicks, they are very powerful zones. Those wicks, very powerful zones. So wherever you see wicks and it's around where you want to pick your zone, you should actually check out for it. It's a very powerful kind of zone. So I just showed you the kind of wicks. You see wicks of candles like this, they are zones. But yeah, you see that it's not every week of candle that they're respecting truly. Yeah. You will know the rules. When we get to the rules, you will know why many will not hold. And same with other blocks, same with any kind of zone, you know. So the third kind of zone that I want to show you guys is the week to week zone. We call it week to week zone. Let me show you. This is almost all over the place too. Something like this is week to week. Let me find. Okay, so let me just mark this out first. This is week to week zone. You get, even though price not get there yet, but that's week to week zone. So if you see a place where week, this is just something like this. The week of this candle overlaps, and this week of this candle too. The week to week of the two candles, you get, is a zone. It's a kind of zone. That's a kind of zone. You can pick it from anywhere. It's almost everywhere, actually. It's almost everywhere. You see it almost everywhere. This is also a week to week. This one is a bullish type. That's a week to week. You get. In fact, that's actually the one that they used to sell. Yeah, that's why price not get to this one. Because when we get to the third one, you understand what I'm saying. So this is week to week. When we get to the last kind of zone, you understand what I'm trying to teach you here, but I don't want to jump. So this is week to week kind of zone. Yeah. This is another week to week. This is week to week. They are very, very powerful kind of zones. Very powerful. So this is week to week here too. This is week to week zone here. Yeah. That's week to week zone. So you want to go and practice and look for it to be able to train your eyes to see it. Yeah. Then the last kind of zone that I'm going to be teaching you guys, the last one is the support and resistance zone. I just call it that, but it's deeper than that. It's deeper than that. Yeah, we need to, you know, make a bit of explanation. That kind of support and resistance zone is any of these kind of zones that I just taught you, whether OB or weak or especially OB and week to week, any form of OB and week to week. And I already established fact that OBs are not only candles that are on the last side of the market or on the higher side of the market, highest side of the market. No. I already explained the ideology behind it. So you already know how to pick OBs even if they are within the range. You get. So I already explained the weak zones to weak kind of zones. Yes, so this is it now. This support and resistance zone is when you pick any kind of these three zones that I've aforementioned, and then you pick them from a third generation price range. This is something that I came out with myself. Like, I mean, the term third generation, so don't get confused, it's just English. But what do I mean by third generation price range? The current aggressor of price is the first generation. That's the current generation that we're on. Most of our zones, we pick them from the second generation, which is, you see me, when price is here and I want to pick zones from around there, you get from inside all this range. This range is the second generation range. But what is the third generation range? Is this range here? Let me annotate so that you understand what I'm saying. Let me annotate. Yeah. This range is the first generation. That's where, let's say this is the current aggressor. Yeah. This range is the second generation. If you want to pick any zone for, let's say this thing will sell from anywhere here. Yeah. You want to pick it from this generation, right? This generation range. That's where you want to pick that zone. But the third generation is this other range here. Many a times, the zone they will use will come from the third generation. You get this one, and I will show you. Um, remember I drew a zone out here, this week to week, yeah. That I drew out here. That I said that's what they used to sell here. That's a third generation zone. I call it support and resistance kind of zone. Why? Because what makes a third generation zone valid is not the fact that it is there, but additionally, the fact that they have used it before. So in this case now, they've bought from this zone, this week to week that I marked out, this week to week that I marked out. They bought from it here. They also bought from it here. You see that? So when price closes it down, yeah, and price comes back to it, price is used to sell. You see that I use it to sell here. Price will use it to sell. That's why they used it to sell here. So this is a week to week that I picked from the third generation and price used it. Do you see that now? Do you see that now? So let's try to look for another third generation zone. Very powerful kind of zone. I'll tell you why it is more powerful than the rest self. I'll tell you why it is more powerful than the rest. Um, it's not always there, just like these other ones too are not always there. That sometimes you might not see the zone, but there is a zone there that price wants to use. You know, you will not just see it because you are not looking to the third generation. Do you understand what I'm saying? So um you have to be able to check third generation price ranges to pick your zones. Now, I'm trying to look for another place where we had third generation kind of zone. I've seen another here, but I want to look for a very clear one so that you guys can easily grasp it. So you guys can use it. Let's go to daily time frame to check so that you guys can use it. So because it's on any time frame. Look at this now. This is a third generation zone, this week to week. I said it, what makes it third generation is not that we had week to week only on the third generation, no. Or maybe other block, or maybe a just a week on third generation. Yeah, that's the first step. The second step is they must have used it before the second generation range or around the second generation range. They must have used it. You get so price has bought from it on this candle, bought from it on this, bought from it on this one too. Before they came to you see price is to sell on this one. Let me annotate so that you get what I'm saying clearly. So this is the zone, yeah. This is the week to week from the third generation. Remember, we are assuming that we are around there on price action. So price is going up, looking for a zone to sell from a daily zone. Because when we get to rules of zones, I'll explain some other things to you. So price is coming for a daily zone. You see that I'm not sure price is this low. I'm not sure it might have, but that's not really the zone that is coming to. This week to week is not really the zone that is coming to. Yeah. Because sometimes they might not eat it, especially when they have this kind of subtitles. I told you that it's very strong. So the subtitle zone. So they might not eat that iron, before they sell at first. Maybe later when they're not coming, they might not use the iron one. But this is it. This is a week to week here that we drew out. Price bought from it here. Yeah. Price bought from it here too. Yeah. You see that? Now when you draw it out, it's the fact that price has bought from it once. It's only once that you need. Well, but it's okay if it's twice too. But once it's strong enough, do you get? So price will use it to sell when price comes back then. Do you get? That's a third generation zone. That's a third generation zone. So you don't want to use a third generation zone that they not used in the second generation. You get all before the second generation. Just like they use this one, they first bought from it. When price closes it down, price use it to sell. You get that's how we pick it. Let me try to look for one more around there. If I can see one more around there so that we can wrap it up. Let's try to look for one more around there. Okay. I can see one here though, but it might confuse you a bit. But let's try a complex one. Let's try a complex one. This week to week. Yeah. You see price bought from it on this candle. And this one sell. So when price closes it, I mean with the body, it's very important that it closes it down with the body. So all this week that I still doing here, when price closes down with the body, yeah, and they come back to it, that's a support and resistance kind of zone. Do you get now? So those are the types of zones that we have. Those are the types of zones that we have. Now, let's come to the result zone. The result zone will give direction to your type of zones so that you just won't be using any kind of zone and price will taking you out. The first rule, the first rule of zone is that the zone that you want to use must be in alignment with your Y. WHY. What I mean by Y, a normal of you that are trading the charts like I do, we understand what I'm saying. What I mean by Y is that it will be, you know, it should be in alignment with the directional bias at that point in time. Do you get? If you are bullish, you don't want to be selling. Price is bullish. Do you get what I'm saying? You don't want to be selling bearish zones. You don't want to be selling it. And if we are bearish, you don't want to be buying bullish zones. For example, if price is bearish, price as is coming down, for example, and you want to be using this other block to buy, you see, you've taken a loss. You get, or you want to use this other block to buy, especially if you don't understand price action very well, especially with the charts, like if you're well, you have a better this thing if you're trading natural as though. But any concept you are trading, if you don't understand price action well, yeah, you'll be buying the wrong zones because you are not in alignment with direction. And one thing HRC helps with is that HRC, I think, in my opinion, is the best what's it called? Best concept when it comes to directional bias. Because directional bias is one of the greatest problems of traders. Do you get? So you can easily, hack that area when you learn HRC. So um that's the first rule to zones. The second rule is the second rule, yeah, to zones is that it must be picked from the right time frame. This is very important because a number of people don't know. And these things are simple as they seem. As I'm saying them simply like this, if you go and sit with them and study them, that's when you know that they're very deep, you know. A number of people don't know that time frame, as it were, like you see this thing is here. Let me use this my painted cursor. Yeah. You see where I'm coming here. You see these things? Yeah. Time frames. They are different from time. You see these things? These are times. You see, this one is showing me that we can go to 1 hour. Let's say we're 1 hour time frame. This one is showing me time. You see 14 o'clock, 15 o'clock. You get this horizontal place is different from time frame. What makes them different? This is time frame. This is time. Time frame is not time. You get a lot of people don't know. Time frame is not time. Time frames are locations. They are locations on price of price. Do you get? Or of price fractals. They are locations. So once you can come into the understanding of that, you will find out how deep that is. And that's why you have to get premium trading view to access 8 hours time frame. If you don't have premium trading view, you go to 8 hours, it won't go. Why is it like that? It's because there's something about time frames that is special. Like there's something about going to specific time frames that are special. A number of that trade to know that we use 8 hours for sessional. We use 8 hour zones for sessional. Do you get? We use 8 hour zones for sessional. So now your zone must be picked from the right time frame, from the right location. For example, if you have daily exhaustion, that is daily diverge, you need a daily zone. If it's daily is the highest one more that diverge, you need a daily zone for price to buy. Do you get? So if you do it that way, you are a step ahead. You're a step ahead. If you do it that way, daily zone for daily exhaustion, 8 hour zone for sessional exhaustion, um, 1 hour zone for closing exhaustion. And these things are deep. They are not just things that, you know, Andre, the author of HORC, just brought out from his head, just anyhow. No, it's actually very little because if you check, why are we using the tower zone for sessional divergence? The reason is because if you check within each session, between each session, we have 8 hours space within between each session. For example, London session opens by 8. But do you know when London session ends? It ends by 4 p.m. It opens by 8 a.m. Lagos time, ends by 4 p.m. Yeah. Calculate the time. That's 8 hours. New York session opens by 1 1 p.m. It ends by 9 p.m. That's 8 hours. Frankfurt session opens by 7 a.m. Do you know it ends by 3 p.m.? That's 8 hours. Do you get? So these things are deep. So we use 1 hour zone for closing range. We use daily zone for daily extension. Um, we use or daily true equity, anyone. We use daily zone. And then we use weekly for weekly extension or weekly true equity. I mean, when you want to target weekly true equity, you want to target it from a weekly zone. You get? So those things are very important. Same as monthly. You get? So you pick it from the time frame. When you want to pick a monthly zone now, you don't pick it from a 1 hour zone, you pick it from a monthly time frame. Do you get? So that one is very important. Very, very important. Then the last rule, which now make me come to the conclusion of bringing everything together. I want to stay to the end. You know, the last rule is your zone must not be true liquidity. Although this is deeper than that, but um, if you want to, as someone that is still, learning, first avoid any zone that is true liquidity. Although you'll find on some zones that are true liquidity that will still hold. That's a deeper level to, learning, the whole concept, the deeper level. But I don't want to go deep like that in this video. I don't want this video to be long because it will take a lot of explanation, in fact, a lot. So, but once you get it, you get it. But maybe we'll do that maybe we'll release another third zone video, yeah, that will explain just that. Why some zones will be true liquidity and still hold. Maybe we'll make that the topic of the third episode. We just discussed just that alone. But um avoid any zone that is having true liquidity beneath it. I mean, what I mean by that is if this is like on 1 hour, this is a 1 hour zone. Let's say this is a 1 hour zone that you want to use. Yeah. If that 1 hour zone is carrying a true liquidity beneath it, you already established the fact that you have already by yourself, based on the way you mark your signal, you have already established the fact that is a true liquidity. It doesn't have to be 1 hour true liquidity itself. I mean closing rate true liquidity. It can be sessional, it can be daily, as long as it's true liquidity. Avoid it at first, especially if you are just then avoid buying from it. Because he even took this one out. He took it out because it's actually true liquidity. He took this low too out because it's actually true liquidity. That's why I took this low out. You see that price still, but you see that the way we draw structure actually is not actually how price prints it. We draw high, low. But why the price do something like high, low, high, then it not form higher low. It formed lower low, but then still went to form high. Some people will say seek and destroy. It's not seek and destroy. Like it's just what is supposed to happen based on if you understand the trust. But let's not go there. So if you bring all these things and add them together, you understand that even if you have support and resistance zone at different points, um um even if you have other blocks at different sides of the market, even if you have week to week at different sides of the market, you know which one we hold. One of the things that will help you with that, they are the rules that I've laid out. You get, for example, you understand that zones are where they are not why, they are just where. Well, you can't just I shouldn't put just there because if you get the zone wrongly, you take a loss. But zones are where they shouldn't come first. Your why should come first. And if you're not trading charts, what I'm saying is that your directional bias will help you in the direction of the kind of zone that you should use. You get? So you should know what works. So that would be it for this video, guys. If you actually got a lot of value, drop what you got in the comment section, or if you have any question, you can drop in the comment section to make sure you join my Telegram channel. A lot is happening there. A whole lot. And then I also have a 1 hour consultation that I do for people, whether you want to learn the overview of HRC concept or you're already learning and you need some answers to some particular question. It's just consultation to ask any question you want to ask. It's just $20 per 1 hour. Very, very cheap actually for that value. So very cheap. So you can opt in for that, and then there's mentorship too. You can opt in for that if you want. Although mentorship is still ongoing, we are not taking students currently. And that one should start October. It's 3-month mentorship and it's just $200. So anyways, if you're interested in any of this, you can reach out. There's one-on-one mentorship too, but if you're interested in any of those, you can reach out to us. So make sure you like, share this video with other people, and have a great time.